to all the members. Thank you so much for joining us for this evening. I would like to call upon the Secretary General of IBPC, Mr. Dilip Sinha, to give a welcome note. Dilip Sinha ji, please.
Yeah. Thank you, Shishir. Good evening, namaste and salam alaikum, everyone. First of all, welcome to this evening's webinar on decoding of the Indian budget. As the Indian budget has just been presented, as we do every year, this year again we have called a noted personality, Mr. Ved Jain. He had earlier come about more than a little over a year back on a webinar and talked about the NRI issues on the taxation, if we all recollect last year. So just to remind you, he's a noted chartered accountant. In 2008, he was elected as the president of Indian Institute of Chartered Accountants, ICAI, which is the second largest Institute of Chartered Accountants in the world. He has been in that, and a lot of things to his credit. I really hope that you can get a lot of answers during this session from him. And of course, our chairman, Suresh Kumarji, will be taking this evening forward with Mr. Ved Jain. So without much ado, I would like to invite Sureshji, our chairman, to take this evening forward. Sureshji, and thank you.
Thank you, Dilip. And welcome once again, Vedji. It's a pleasure to connect with you yet again on the, in the post-budget session. And I was also impressed that you bring not just the perspective of a tax expert, an accounting expert, or an auditing expert, but you also you're on the board of DLF. You're on the board of is it the healthcare services company and MCX clearing company, and so you bring a lot of industry perspectives, which I think makes it particularly interesting or relevant for a session such as this. And more importantly, I think you're in Delhi, based in Delhi, and I'm sure formally and informally you're privy to the goings-on in terms of the preparation of the budget, which remains, of course, a highly confidential exercise. But the finance minister and the finance ministry senior team have been consulting a number of senior experts, including yourself. And I think that those insights that you gain in the process are very useful to share with our audience. So the budget itself, budget 2022, has been in the news for the last 3 days, both in the run-up to the budget and during the budget session and post the budget session. The media has been full of it. There's been lots of analysis. But if you would like to give your comments on 2 or 3 specific aspects of the budget. One is, in my view, it is very strategic. It's not a short-term budget. It's not a short-term focused budget. It is very strategic. It translates into action, digitization in a big way, not just the digital currency by the RBI, not just connecting up all the post offices into a banking channel, but also in terms of this entire UPI, the JAM triangle, JAM triangle, as it were, the Aadhaar and the entire gamut of technology that has developed into the payment system in India, I think makes a compelling case for India to be one of the world's most dynamic digital economies of the world. It's already, in terms of the GDP growth, the highest large economy in the world in terms of growth rate and what is projected as well for next year. But I think this digitization and the momentum with which it is being built up is also phenomenal. So it's a very strategic budget. It addresses the issue of green bonds. It addresses the issue of looking at a massive infrastructure spend, as we discussed, 35% increase year on year. And all of this, especially if they are front-loaded, the expenditure, will cause a virtuous cycle. So my first question, therefore, to you, Ved, is how do you see the economy responding to all these stimuli, and what is your assessment of the budget, in all its facets? It's, the finance minister has not tinkered with the tax system. There is tax stability as well, and it's predictable and stable, which is always a welcome feature. So please give us and share with us your overall view of the budget in this context.
Thank you, Suresh. Thank you, Dilipji, for giving me this opportunity to share my views and to be part of this program of IBPC. I'm happy to be back again on this program here and to share my thoughts and my views on this budget 2022. As we all know and see that the last 2 years have been very challenging years. Somewhere in January 20, this Corona crisis started. And in India, it hit like anything in March. We had the first wave, we had the second wave, and now we had the third wave. So these were the challenges which the finance minister was having while preparing the budget, how to project the future, looking to the years which have gone past. And it was an opportunity also for her to showcase what India can do in the next 25 years. As you would have noticed that India, this budget, she has tried to give a shape that how India is going to perform, how is India going to harness its population and digitization in the next 25 years. As I understand, in IT sector, Indian youth has done very well. And the first 2 decades of this century, I goes to our youth of the IT, which has helped the global world, all the world in IT sector. And the next 25 years, as I see, India is going to use this digitization to its advantage and its population on that part of the world. Now, one thing was positive only in 21-22. As against 2021, the revenue collection was reasonably good. There was a lot of dip you would have seen in 2021, where the revenue collection was down. But 21-22, the revenue collection was very positive. Maybe income tax, maybe GST. That, I think, probably encouraged the finance minister that to take a leap forward and not to get bogged down by these numbers only. An idea you can have it that the total expenditure during the financial year 21-22 is going to be more than what was estimated, but still the fiscal deficit is almost the same. It has just gone up by 0.1% on that part. So that's the issue with it. Now, Indian economy, that way, we have been very, I think, conservative in projecting the growth in 2023, the number which we have seen on that part also. As you have rightly mentioned, that the growth in the economy will come from the capital expenditures. And she was bold enough. You see, the finance minister has to take a call. She could have easily cut down capital expenditure, say by 1 lakh crore, and that would have brought down the fiscal deficit down by 0.3% because every 30,000 crore rupees odd. Now, if I look at the total number of Indian GDP in the Indian rupees, the GDP in absolute number for the year 21-22 is going to be roughly 232 lakh crore. And she has projected a nominal growth of 11%, 258 lakh crore. So now we have 232 lakh crore, we turn out to be $3 trillion economy. If I more than 3 trillion, if I take 75 rupees as the dollar rate, middle rate. And now 11%, if I look at the growth, which is 9% and inflation of 4 to 5%, so it should have been 14%, but she has been conservative on that part, which show that Indian economy is going to perform much better than what as it is. And in the background that there were challenges to her, and if I can enumerate 4 challenges, which she has also flagged. One was the oil prices, which are going up like anything now, like roughly touching up $90 per barrel. Second was what we call imported inflation, the global inflation. Looking to the US, the way the US is economy and the UK economy, I think UK is having the highest inflation than ever. That's we're going on their issue. And the third was a challenge that we normally have in India about the monsoon, which is normal. And the fourth, unpredictable, how Corona is going to be there in the year 2022-23. But still, she had taken a very bold step. Look the number of announcements she has made and the way she is working out. You have mentioned about the digitization. I believe she will revolutionize the whole education system by putting these more than 200 TV channels across India, for each class, 1 channel in 8 languages. See, now you see the reach out to the poor students, and the best of education which will be given. And what she says, it will be competitive and qualitative. So teaching will be competitive and qualitative. And the benefit which I believe Corona has given us lesson to learn from what it did, the communication. Now, a small village will have the same facility which an advanced city like Delhi, Mumbai, Calcutta, Chennai have the facility, I believe. The student there will be able to know and learn what a student maybe is able to learn in Ahmedabad or maybe in Hyderabad. So that's a scenario which he has taken a call on that front. And if we look at the stability from the perspective of the fiscal working and stability, as is usual when the budget is presented, the demands come up. This is a human nature. Something is going to be, you immediately raise your hand, I should get something. So it is obvious for taxpayer to ask, yes, I should get this concession, this concession. But as you rightly said, having worked closely with the Ministry of Finance for a number of years, I know ultimately is a compulsion, and budget is a balancing exercise. If I give out something to someone, I need to take out something from other so that my balance is there. That exercise has to be carried out. I tell so many people, when people tell there should be expenditure tax, not income tax, etc. At the end of the day, somebody will pay less and somebody will pay more. So it has to be the same thing. Country has to run. It needs 40 lakh crore rupees for a year to run and to grow. So that money has to be collected. But hats off to the lady. She did not succumb to the pressure, gave a stability to Indian tax regime. For the last 2 years, 3 years, there is absolutely no change in the tax rate. It may look bad for an individual taxpayer, I didn't get a concession, but credit should be to her that despite this serious Corona crisis, she could have easily imposed some additional tax or tax surcharge or something like this to overcome this difficulty of economy, but she did not cause it. And that's why I gave an example yesterday when I was speaking on some electronic media, etc. It is like a glass half filled or half empty. The taxpayer should be happier that no additional tax has been levied. A stability has been given on that part. And that's a plus point which is given on that point. And now coming to some on the global side on the issue, I think 2-3 issues I can touch upon and then you can talk about it. She was conscious enough that wherever there are some irritants in the Indian present fiscal or what we call tax structure, she has removed it. Now, one example I will give you, a capital law or the surcharge of 37%, which is levied on an income of about 37%. Now, this was levied considering the fact there are a few number of individual rich people where income is very high, and in order to balance that tax surcharge was levied at 37%. But then being pointed out that this surcharge is hitting FIIs and other people also. So last year she said that this will not be applicable on dividend income and also on the listed shares when you make a capital gain on listed shares. Now this year when she was brought to notice that sometimes the long-term capital gain happens on unlisted shares also. Private equity players, FII, FDIs, they may do investment in companies which may not be listed. And where they want to exit, they may have to pay 37% on that tax also, on 20% going at, which goes to 28.4%. So in order to address, and secondly, capital gain may happen on an asset which you have bought long time back, so it does not represent the income of the current year. For that purpose, now she has reduced that capital gain tax surcharge to 15%. And what will happen if you have a long-term capital gain? You will have to pay 20% plus 15% surcharge, not 37%. Now, you would have noticed that in this budget, she had levied a tax on cryptocurrency. It is not a new tax. It's a small thing. Only thing is there were discussion going on what nature of income. As an Indian resident, every person is supposed to pay tax on its income, whatever income you have. Now, there could have been a dispute whether it is a capital gain, whether it is a business income or other income. In order to put all those disputes at rest, she said, straight away, we will levy 30% tax on this and whatever is the. And you will just notice 30% plus applicable surcharge. If you have an income beyond 5 crore rupees aggregate, including this crypto, then you need to pay 37%. You will also end up paying 42%. And then on capital gain long term, it will be 15%. So she's very clear on that part. Another lacuna which she has removed is many of the companies internationally or also Indian companies do operate as a joint venture in India for various projects. Collaboration, joint venture, when big tenders are there, Indian partner join, a partner come from outside. So these AOPs are also taxed as individual, and where there was a lacuna that these were also being getting at 37% surcharge coming to 42%. And somebody pointed out that these are companies, they should not be levied 37% because company's rate is otherwise very low. So she has removed that lacuna also. Many would not have noticed. Association of person like joint venture collaboration, where all these partners and members are companies, the surcharge will be 15% only. So that has also been given a big concession to boost growth and to give boost to the infrastructure, etc. Because by and large, the joint venture collaboration comes up in infrastructure also. In addition there too, she has widened the definition of the infrastructure. What is infrastructure? So she has widened that definition and including many items that which are part of the infrastructure which country need and which where they are asking for the investment on that part. So these are the measures which she has taken, and stability of a regime itself is a very, very big, I think, I think part of that overall country's strength. Yes, there is a stability in the structure. And in order to remove, I believe, discretion also, she has made so many administrative changes where we are saying dispute resolution, litigations, avoidance, and faceless. I think no country has so much digitization in taxation as India has. Even the advanced countries like Australia and New Zealand, which I used to use the data, their digitization in taxation is not of that level which we have got it now. And now faceless, I believe, is a new model which we have given to the world also. That you need not come. In case need be, we will meet like this. We'll ask you a few questions and then go away. And you need not come to even me. Even USA say that we will send a notice and you please come once a while. But we will not say no. No faceless, no face-to-face meeting. So that's a scenario which has been developed.
I appreciate it.
Yeah.
I think with let's examine the budget in terms of specific perspectives. We'll start with the obvious one. In the UAE, in the GCC, globally, we're all NRIs. So obviously, there has been no changes to taxes, either positively or negatively affecting NRIs. But on the opportunity side, the NRIs have now got tremendous opportunity to participate in the capital expenditure. For instance, the green bonds that the finance minister has announced they will issue. Green bonds could well be something similar to the Resurgence India bonds or the earlier bonds that were heavily subscribed by NRIs. So that is an opportunity. And I think that is one way by which the NRIs can participate in the growth story of India, in the strategic growth story of India, in the nation building efforts of India. Similarly, the opening up of the various sectors, especially electric vehicles, that entire chain with regard to green energy, solar, the PLI related schemes, etc., are all opportunities not just for NRIs, but institutional investors from this region, which is capital rich, as you know. There are a number of sovereign wealth funds. So how do you see the tax impact, whether you would expect to see more favorable tax treatment, advanced tax rulings, clarity in that front? Because already I think the government is keen not to encourage tax disputes, and they have fast track resolution schemes and the like. So could you just give us a sense of how do you see the taxman? Obviously, NRIs and overseas investors will pay whatever tax is due, subject to, of course, double taxation treaties that are there in place. But give us a sense of how do you see the perspective?
See, let me first clarify the issue which is about the non-resident Indian also, which has arisen. India has a India-UAE treaty. Under that treaty, any person who has been in UAE for 183 days or more, under the UAE law, he will be a resident of UAE. And if he becomes a resident of UAE, he will be eligible for taking the benefit of the UAE treaty. And India cannot treat that person as a resident of India under any circumstances.
Yes.
Because then tiebreaker rule will be applicable, and he being a resident of UAE for 183 days, so he will win over that tiebreaker rule.
Correct.
So he gets an advantage. So there has been a lot of apprehension on that point, that whether we can visit India for 120 days or more, or 122 days more. Only challenge comes up when you are not in UAE for 183 days.
Okay.
Then you are roaming around. You say, I have been in India for more than 120 days, but at the same time, I have not been in UAE for 183 days or more. So I have been saying, if you are in UAE for 183 days more, then India cannot disturb that, because under treaty, you become a resident of UAE.
Yes.
And if you are become a resident of UAE, you become entitled to everything, entitled benefit.
Okay.
Now, coming to your issue, that what type of investment and what the situation is. Now, you see, India has a tax rate on a corporate. Manufacturing company, 15%, effective rate will be 17% if I include surcharge. And other company, 22%, effective 25%. I believe whosoever is going from away in will fall in a manufacturing company. And this rate of 15% is the lowest rate in world on the company. Now, I take any person from UAE and goes and invest in Indian company. Now, what he will be required, that he will be required to pay just this 15% tax on the manufacturing company. He can now, and India has amended tax law last year also.
Yes.
Even dividend distribution tax has been abolished. Whatever the dividend comes back to UAE, the tax rate is 10% under India-UAE treaty. So now, if I say, if I want 100 rupees, 83 rupees I get from there, and after paying 7 rupees more, 76 rupees can straight away come to UAE, and that's the best part of it. 2 days back, I think UAE also introduced some 9% tax on the business profit, something like this. And in case that be that now this 74 will be tax-free income here in UAE, because UAE is not going to tax that income of India, and if they tax it, they will get a credit of this Indian tax rate. So that's the best scenario available. Now, I believe this tax regime is one of the best regime. The second reform which we carried out in 2017 was GST, seamless movement across India. So logistic and the movement seamless is logistic. If your business is fair and transparent, then absolutely no issue on that part. As regard litigation, last year Indian income tax was amended that to put an end to litigation and the issue, 3 years will be the period for which the assessment can be disturbed, not beyond 3 years. So that will be another benefit, which is there. Litigation will be the minimum all on that part also. Now, coming to the, because anyone will like taxation may be secondary, but the first issue will be because taxation also gives you income. If I earn 100, I can get 70, then it is as against 80, then I will not go. But if I can get 80, I will go. But I first need to make 100. For that purpose, now you see the opportunities which are available in India. See, any sector you look into, India being a mass consumption-based economy with 135 crore people, just imagine what demand we are. See, in other country, if you go for manufacturing or production, you will bring raw material from some other place, you will manufacture, then export. Here you have an advantage that you can get the raw material there, you can manufacture, and you can consume there itself. You can sell in that country, and that's a benefit. And for that purpose, I give commonly one example, which may be sometime looking to be attractive, or maybe what I say, invest India. But people sometimes ask that whether a person or a company or an institution will like to take a risk of making investment in India. I pose a counter question to them. India is such a mass consumption-based economy that in the year 1982, when India opened color television import and TV went colored, not a single color television set was available off the shelf right from Tokyo to London. We imported it. So this is the position. Now look at the mobile phone. In 1995, this mobile phone came in the world over. Can you imagine that how many subscribers we have? 120 crore subscriber we have. We have the 3 companies, each one of our almost having 41 crore subscribers. And look at the profit. I was just, because I'm advisor to few of them, look at the issues. If my average revenue per user goes up by 10 rupees, how much money I make? $12 billion.
Yes.
So that is the scenario which India has. And looking now, coming back to the budget, the finance minister announced 25,000 kilometers of highway roads in a year.
Yes.
Just imagine what is happening.
Yes.
400, this Gati, what we call this train, Vande Bharat, in the next 3 years, these are going to be 400 trains that way. Now see the opportunity which will become to the ancillary, etc. also on the issue. Now electric vehicle, it will be totally revolutionized. I recall my experience way back in 84 when Maruti came, and now see Maruti India is much bigger than Suzuki Japan.
Yes.
With the country where it is. Now electric vehicle, I see the Indian target is that by 1930 we will be substantially, I think there will be electric vehicle. But I'm reasonably confident the way India is going, in next 3 years you will find all electric vehicle on roads.
I agree. I think the growth story in India is here to stay, and the growth will also translate into growth in valuations, growth in terms of price appreciation, etc. So from an investor perspective, it is a win-win situation. But you referred to the corporate income tax, as they call it in the UAE, the 9% corporate income tax. This has been announced principally because globally the G20 decided that there should be a minimum corporate tax, and the question of tax havens should be minimized or avoided altogether. And some of those have been put on notice that their status will be scrutinized very carefully in terms of their dealings, etc. So the UAE, very quickly wanted to be aligned with best practices in the world. So for tax transparency purposes, the UAE decided that it would charge And it's not just the UAE, it's the GCC, except for Bahrain, which is a small economy and has got its own challenges. Apart from Bahrain, every other country has a corporate income tax. Some of them have a much higher rate, 15%. So the UAE's rate is the lowest in the region and one of the lowest in the world in terms of corporate income tax. So many Indian businesses have come and set up shop in the UAE. They have started either manufacturing or packaging and positioning themselves for global exports in terms of exports and re-exports from the UAE. In terms of, the Dubai's infrastructure facility for air, sea, shipments, and the like. So what kind of tax implications these Indian businesses need to watch out, obviously on the corporate income that they generate in the UAE, business income that they generate in the UAE, they'll pay 9% tax. Is there some kind of a set-off, or how does it translate when, the parent company in India, the subsidiary in the UAE makes this income, the parent company in India, transfer pricing rules are going to be as per international standards, OECD standards. So would you be able to anticipate what kind of tax issues that might be there?
See, there are two challenges which will come up now. See, as on date, the tax regime for subsidiary companies from India, Indian parent company and subsidiary in UAE was very, very favorable. There were two reasons.
Yes.
One was that on subsidiary company profit, there was no tax in UAE. And when dividend from subsidiary company was going to the parent company, the dividend tax on dividend was 15%. Now, this year, there is a proposal that this 15% concession rate is being withdrawn in this budget 2022. So any dividend going from subsidiary company to the parent company will be taxed as a normal issue.
Okay.
Now, 9% tax having been paid in India, UAE as a subsidiary company. Now, the credit of that will not be available.
Okay.
In India. Credit will not be available to India because it is a tax on a subsidiary company on this issue. Though there are rules which say underlying credit sometimes is available. So I think this will, when the rules are framed and working is going on this issue, some issue will come up how to restructure the business. If you have an Indian branch of here in UAE, whatever tax will be paid here, you will get a full credit in India.
Okay.
So there can be a reorganization taking place, but branch has its own implications because then you are not able to create a firewall which may have happen to work, because in subsidiary is mainly to create a firewall against any risk of the parent company. So I believe that restructuring will happen, but I am of the view that this is not going to affect. On the contrary, it is going to bring more credibility. As you rightly notice, this was a basically G20, which was being persuaded by OECD, Organization of Economic Cooperation and Development, because that is the active body on that taxation. So they have been advising G20 that push all countries to have a minimum tax so that there is a trail available. So there is at least not like an allegation of a tax haven on this issue. I am of the view it will regulate UAE economy more efficiently, more credibility will be there, and more investment will flow both sides from India to UAE and UAE to India also. Because when investment come from UAE to India, that having been 9% taxed, so credibility will automatically improve. And I believe that will be more win-win situation for both the countries.
Thank you. I will ask you one more question before we open it out to the floor. And please, would all attendees post their questions in the Q&A box. So, Ved, one question that on the flip side, do you have a wish list or do you see any issues on which the finance minister or the government should have done better? Because obviously the finance minister and the finance ministry prepares the budget and then it goes to the cabinet and the cabinet discusses and adopts it before the prime minister approves it, before it is presented to the parliament. So would you see any other matter that she could have addressed better, or she should have included it, or she should have reduced it or increased it? On the flip side, we see a lot of very, very dynamic and positive steps. But on the flip side, would you see, for instance, there is a constant complaint that not enough has been done to create jobs. Of course, infrastructure spend will create jobs, but nothing specific. Maybe the job situation should be analyzed. Those industries which create maximum jobs, like textiles, for instance, or anything that is highly labor intensive, those industries could have got different and better tax treatment and so on. So would you like to share what other items in the wish list that you would have if you were the finance minister?
I will answer it two ways. First is that as and when you have to take a decision, you have hundreds of proposals on your table.
Yes.
Whatever you pick, you will find something has been left out.
Correct.
This is experience.
Yes.
If you are a president here, a chairman here, you may have so many wish lists of members.
Yes.
But then you have to choose some priority, you have to work it out. Whichever the priority, you have to work it out.
Yes.
So she did her best and she picked up some items and she. As regards the employment, I do believe that this is a major issue in India, particularly post-corona. And my personal feeling was also concerned about the migrant laborers. See, if I look at this post this pandemic issue, one thing which has come up sharply, that who has to take care of the migrant labor, which we don't have a record and which suffered a lot in the process.
Yes.
MSME sector lost employment, migrant labor, you do not know, nobody bothers about it. So something could have been done for that migrant labor, etc. But I believe right from 2 years when the pandemic happened, a conscious call has been taken as a policy, I believe, not to give money directly in the pocket of anyone. On the contrary, to support him by other means.
Correct.
Now, to take a case of industry, instead of giving a direct benefit to any industry, credit was extended.
Yes.
That's what I read. Deferment was done on the issue. Government gave a security and etc. And she did mention that for hospitality industries, I am giving a credit now. She has extended, would have seen ECG, she has given a credit government guarantee on this issue.
Yes.
So she have provided for that. And I believe this question was posed to her yesterday in a press conference also, that your budget is absolutely silent about the unemployment and the inflation, both is here. And then she immediately retorted back, don't you find that how much expenditure I have booked in capital and what that road will, 25,000 kilometer road will do, this 400 train and this all these issue digitization, what is going to do? All this is going to generate employment. And I am reasonably confident some exercise would have been carried out on that part. Now, on a flip side, you have posed a question, what you would have done on a, I being an accountant also and looking to the tax side also.
Correct.
I look at it in a different perspective. You always say, wonder, you would have seen by GST collection of India, as and when Corona goes up, it dips down by 30-40,000 crore rupees. It has gone to 90,000, 85,000, and then it would go to 1,30,000 crore.
Yes.
I say, as an investor, businessman, as a government, had I put 50,000 crore rupees more on health, on Corona fighting, I would have saved that 50,000 crore rupees in a single month from my GST collection.
Yes. Yes.
Suppose by putting 50,000 crore rupees, I am able to avoid a lockdown for 1 month. I get back that money by way of GST collection, but to talk about employment and income tax.
True.
I was of the person that put all best effort on health and all, other infrastructure on this issue, so that you are able to fight out the Corona or health issue later on, because this may be affecting the economy otherwise also.
True.
Like anything. So she should have pumped in as much money for this as she has put in capital expenditure, saying we will fully support the health sector and we will fight it out, maybe pharma, maybe research, maybe hospitals, more money. That's my wish list. You asked me the question. And one thing more before you open the house, just for the sake, for benefit of you. You will have heard about the gift city. India is
Yes.
developing in Ahmedabad, that issue.
Correct.
Now that gift city is happening already and going to be another happening city where all facilities absolutely tax-free or benefit will be are available there. Years after year, we are extending the benefit. And this year also, all non-resident can go and have a portfolio management. They can do also derivative, future derivative, etc. And with no tax whatsoever. Just imagine, no stamp duty, no STT, no GST, no income tax. And this can be a big bonanza, particularly for the UAE resident.
Yes.
Because in other countries, the challenge is, even if you earn from a tax-free country, when you bring back the money to your home country get hold of you because you are a resident. Now, despite 9% corporate tax coming up, as an individual, when you will invest in India and you will do business there in PMS, you will not be taxed.
Yes.
So it is a win-win situation. And in this budget also, there are 4 at least provisions where she has expanded the scope of this exemption. So my suggestion to my listeners here will be, they can look into this aspect, and it is going to be one of the best because you can do trading. And one thing more, it is not India's tax stability, but otherwise regulatory stability. I think the country has not faced any major challenge in the last 7 to 10 years, I believe 7 years at least, any major challenges where you can find any financial big irregularity or any crisis had come where people would have felt that their money or whatever they have invested has run into challenge. Few exception, individual can always be there, so corporate, etc. can be there. But as a system, I think the SEBI, the way SEBI, the insurance regulator, IRDAI takes care of, the electricity regulator takes care of, and the way consumption has increased. So all these sectors are contributing, and one can look to the stability as an individual or as a otherwise investor can also look into that part.
True. You're right. You're absolutely right. So we'll start taking members' questions. We'll keep it a rapid fire with so that I'm conscious of the time, your time, and our members' time. It's going to be dinner time very soon here. So let me start. Yogesh G is the first one. He says, since the revenue collection was good as compared to last year, does that mean India's economy has grown up well? Will it open the door for more opportunities and cater to great businesses from different segments of the industry? So he's talking about revenue collection.
Yogesh is absolutely right. 3 factors can indicate that economy is back. 1, e-way bill generations. Every month now it is being computed. As you said, a digitization benefit. You can monitor how many e-way bills have been generated. That shows the movement in the economy.
Correct.
GST collection. That also shows. And thirdly, income tax collections. Now, these collections being very good, this shows that Indian economy, the organized sector is doing much better. And that's why there should be no apprehension about economic growth continuing in the same direction, which we have projected 8 to 8.5% in real terms next year. And I think that's the largest number globally.
Yes.
China will be far behind than 8 to 8.5%. I believe China will be less than 6% as the projection I can see on that part here.
Okay, I understand. Next question, in fact, there are 2 questions from Mr. Gary Wabi, a very senior member. He says, I would like to have clarity on private equity investments that are sold before IPO and after an IPO. That's his first question. Would you like to take his first question first?
Yes, I believe in case you are selling it on the eve of the IPO, then you get the benefit of the IPO. There is a mechanism available and there's a circular to that aspect. Okay. But if you are selling as a IPO, not before IPO, on the eve of IPO, but as an unlisted share, so now I think his concern may be about the surcharge which were applicable at 37%, which in this budget has been reduced to 15%. So my suggestion will be to wait till 31st March. Because the new law will be applicable from 1st April 2022. So if we sell off after 1st April 2022, so he will also fall in the 15% tax bracket on that part.
And after an IPO, there is no particular impact.
After the IPO, no, there's no particular, because earlier also there was an exemption, 10% tax is leviable.
10% tax. Yes. Okay. Okay. Mr. Bobby's next question is regarding tax. If investment done from Mauritius or Gift City from so what is the big difference between Mauritius and Gift City?
No, see, Gift City investment and Mauritius now, I think India's treaty with Mauritius has also been sunset clause, and that has become applicable. Earlier, what was happening was that we had a treaty benefit whereby any investment coming from Mauritius, capital gain arising was not chargeable to tax in India. Because we say that any profit which arises to you from the transfer of a capital assets, where underlying benefit substance is in India, India will have a right to tax that income. So now that benefit is not available. And frankly speaking, Gift City also does not permit me for making that investment from that in India. I believe a similar benefit as on date is available is through Netherlands only. So we have a treaty with Netherlands, which still has a similar clause, something like this. So that's why major investment in the last 2-3 years has come from Netherlands. So I don't think that other than that, all other benefits will be available.
Okay. We got a question from Mr. N.P. Ramchandran. It says, while infrastructure expansion is welcome, how is it going to solve unemployment? Number one. And number two, all the public sector undertakings like LIC are being privatized. Definitely unemployment is going to increase, according to him. And number three, what are the provisions to rehabilitate NRI families who have lost their jobs or lost their lives due to Corona? So three aspects. Let's take the first one. Infrastructure.
How this infrastructure, you see?
Yes.
Just one thing which we notice is when infrastructure project comes up, it is not that they come on its own. What are infrastructure? You make a road, you make a bridge, you make a dam, you make a port, you make a all this. You need a huge labor for that purpose.
Correct.
So it generates employment. It's not that it is not. Now, you see, one of the projects you would have, I think, heard when she was speaking yesterday in Parliament was this optical fiber in reaching out to each village.
Yes.
Now, laying down of optical fiber in each village, how you will do it? How many people will get employed?
Correct.
So that's the employment which is generated, and that's a resource generated.
Absolutely.
And even those companies which will do it, they need to employ people. So infrastructure is one thing. Secondly, real estate sector is promoted by the government only not because they want real estate people to become rich. Because real estate is the only sector which is the largest employer of unskilled labor.
Okay.
That's the one reason. Now, his second question was, if we can just look at what is the second question?
I'll tell you. The second question is, LIC and other public sectors are being privatized.
Oh, no, I will answer this like.
Unemployment.
See, wow, no. It will not create unemployment. It will create much larger opportunity for employment. I will tell you like how you see. You will recall way back in 80s when computerization was going on. All these union in the government sector, they were saying, don't go for computer because it will create unemployment because computer can do work of 10 people at one time. But what we have seen today, computer has created more jobs as compared to what were earlier on this.
Yes.
So LIC or all these public sector, because at the end of the day, it is the efficiency which is going to survive.
Oh, correct.
Only people, you employ more people. We have seen Air India now. Now, Government of India having privatized Air India. Now, the number of people which you need to run an airline may be far more than today as you really required. So, for a temporary phase, it may look like that those people may getting unemployed. But look, when this efficiently will run this airline, how much more job, more facilities, hospitality it will create, and it will need to. That is the additional advantage. So it does not create unemployment. Privatization is going to help. On the contrary.
And his third question, of course, is he says rehabilitation of NRI families who have lost job or lost their life due to Corona. My suggestion to Mr. Ramchandran is the Kerala Chief Minister is here from his home state. He's the person who should be answering it because, at the state government level, a lot of things can be done.
I can answer this question in a way. Even in India, central government by and large has not given any help on that point. Though the Supreme Court had directed the state government also at some time to pay a few lakh rupees, 3-4 lakh rupees per person for that people who have lost their lives on that issue. I do agree it is an issue of a sentiments, I believe that way. And I think should be considered sympathetically. As you rightly said, the Kerala Chief Minister can take care of it.
Yes, he's in town. In fact,
I do agree. It does need a sympathetic approach on that.
Yes, yeah, absolutely. There is a question from an anonymous person who doesn't want to reveal his name. He says, in the wider context, how do you see 35% ratio of inflow from borrowings, whereas 20% of the outflow is towards interest on debts that are parked in the union budget?
You see, there are two sides to look at this. As I rightly said, half empty or half filled. His question of 35% is 39 lakh crore, where you have 16 lakh crore borrowing. So probably, I think he's looking into that aspect. I believe that's an idea.
Correct.
And but I always say that fiscal deficit and these borrowing are like salt for a food. If you want to grow and in a developing nation, it is important that you outpace what you generate.
Yes.
And for that purpose, you need to put money. And that's why I think this concern has been addressed by saying that we are putting more money into capital, not revenue. And then when further, this interest expenditure is going to come down, though borrowing may be going, with interest rate in India being the lowest as now.
Yes.
So that way, I believe also that it will get benefited. But I do agree with him that higher interest cost may be a cause of concern, but looking to the present scenario, I think probably it was justified.
I think we have two other questions, which I will combine. One from Mr. Tarun Kandelwal, who says, can you expand on the additional benefits extended in the Gift City? He says, I spoke with them 1 month back and they do not have an SPV regime. Is there a requirement to be physically based in Gift City with an office? Or can it be done without a presence in the Gift City? Number one. And number two, Mr. Gary Bobby is asking a question. I've got an existing investment portfolio in PMS. Can I transfer it to Gift City to avoid capital gains and other taxes? Maybe you can take the second part first.
Second part, I can take part first. He is absolutely right. Now, with the PMS scheme being available in the Gift City and being tax exempt, there is a section 10(4)(f) which has been introduced for that part. So that being exempt for that part. So after 1st April 2022, he can shift the PMS scheme to the Gift City, and then whatever the capital gain and whatever income arising is will be exempt in his hand on that part. So there's absolutely no issue on that part. As regards the second part on this part, by information which I say that you need not be physically present by doing the transaction in the Gift City. But if he is trying to operate as a unit, because many banks have also set up a unit in the Gift City, because income of the bank will unit they set up is also exempt. Aircraft leasing, now ship leasing, and aircraft part, helicopter part, ship part, leasing, all these income have been made exempt. And all these are financial instruments, because leasing is by and large a financing model.
Yes.
So all these are financing models. So I don't think that your physical presence is required. I think your digital presence or electronic presence can also do. But in case there's a specific issue, I can look into and get back to you.
Okay. And there is one final question, comment also, which is not in the question answer session, but it's in the chat box. For Gift City, for Indians who have stayed more than 183 days in the UAE, will there be any tax applicable? I think you have answered it. If it is an NRI resident here, and who qualifies as an NRI, there are no tax implications there.
It is a non-resident, not NRI. Non-resident itself will sufficient.
Non-resident itself will suffice. Okay, okay. So thank you very much, Ved Saab. I think that rapid fire round, closed off the session very nicely. I think we'll have to stop taking. I think there are still some questions that are coming up and comments that are being made, but I think we will want to thank you and hope the next time we have a session where we can host you in person. And,
it will be player, sir. It will be player.
And I'm sure our members will have even more questions at that point in time. So thank you very much once again.
Thank you, sir. Thanks a lot. It was a player being part of the program. Though. Thank you.
Thank
Sir.
you.
My best wishes to all the members, please.
Likewise. Thank you.